It's been 3 to 4 months since we started seeing headlines like this about the real estate market. But at the end of the day, all we can do is look at the numbers to see if it truly supports what all the media out there is pumping. Remember, folks, headlines sell, negative news sells. But what are the actual numbers when we dive into the Denver real estate market? And that's what I'm here to do, is show you July and where we're trending. Our prices going up and down. What's inventory doing? What are interest rates doing? So let's take a moment, take a little bit of a deep dive here, and check out what the real numbers are. Okay, so let's dig into the Denver metro market. Remember, this encompasses all around Denver, so this isn't just city of Denver. This is Jefferson, Douglas, Elbert County, Boulder County, Broomfield County, everything surrounding it. Now, the big number everyone wants to know is the closed price. So closed prices seem to peak in April at 600,000, and we've dropped by 10,000, 5,000, and another 10,000. So the average close price in July was 575. So a little bit down, but not a huge drastic drop, just a little bit. The amount of new listings to hit the market was up at its peak in June at 11,500 new listings to hit the market. Now that dropped down to 9,700 in July. So that's really interesting because that's a drop by about 15% or so. So when you have less inventory, what is naturally going to happen is that inventory is going to get bought up and then prices may continue to rise. But that's correlated with how many are staying on the market. Now, we're looking at the last 1 year of time frame. Let's zoom this out a little bit and look at the last 5 years. Okay, this is just like a heartbeat. Cyclically, we are very much in the norm. We usually peak in June, July for new listings to hit the market every single year, and we have for at least the last 5 years. And if we open this up to the last 20 years, or the last 13 years, I should say, it's pretty much the same. So more new listings hitting the market every summer, but there's more people that live here. There's more houses for sale because there's more new builds. So it kind of makes sense. All right, now the number of active listings. So this is a little bit interesting. So in June, we had 11,000 new listings, or active listings, I should say, that are on the market. And in July, we had 12,000. So what that means is that the new inventory, even though we went down a little bit from new listings hitting the market, there weren't as many sold. So more remained active. And you're going to see all those headlines out there about price drops and price changes and all that stuff, but I've got a really good reason of why all those price changes were happening. So here's what happened. For years, we were advising clients to get your house under contract first that you want to buy, and then we'll list your house for sale because everything is selling in under a week, right? Well, what happened when that stopped? When that came to a halt, we had a lot of people who were under contract to buy their next house, their dream house, right? Their move-up house. Now they had to sell their property. Well, showings came to almost a halt, it seemed like, which cyclically always happens in the summertime too. You've heard me talk about this before. But then what happened was they were pricing them at the top of the market, and the market wasn't supporting it anymore. Now, they've got this house they're supposed to be closing on, but shoot, they're not getting any traffic on their active listing. So they've had to aggressively drop prices by 5%, 10%, up to 20% just to get traffic in the door to sell that property. So we spiked really fast in prices, and then we dropped really fast in a lot of the houses that were on the market. All right, so number of pending listings. Back in May, we were at the peak of the year at 8,600. Then we dropped down to 7,000. And in July, once again at 7,000. But let's zoom this out a little bit and see, this is where we're a little bit off on the numbers, is this isn't quite normal. So we can see back last year, June and July were some of the highest months that we had under contract properties on. Same thing with 2020, although 2020 was a really funky year. 2019, June and July were the peak months for under contract. 2018, same May, June, July. So we're back to about the 2018 number of how many listings are currently pending on the open market. So we're still within the range, but Usually June and July are two of the highest months. So that is a little bit of an abnormality. All right, now the number of closed listings. This is why we're getting more inventory on the market. So what happened was interest rates doubled over the last handful of months, as most of you may know, which affected most buying power by about 25%. So if you were looking at $500,000 houses, within a month or two, you were now shopping for $400,000 homes. Now, what if you were looking for a $300,000 house, which is not easy to find in the Denver market? You have to be getting a condo that's 1 or 2 bedrooms to be looking in that price range. Well, it knocked a lot of the buyers out of the market at that price range. So everybody kind of moved down a tier on what they were looking at price-wise. And we can see May was the peak of closed listings at 8,400 in a month. Dropped down a little bit in June, down to 8,200. July said dropped down to 6,500. Now let's zoom out a little bit on this and see over 5 years. So this year we're at 6,500. Let's look at last year. Last year we were at 9,200 just about. In 2020, July was at 10,500. So we're not quite down 50% from July of 2020, but almost 40%. Let's look at previous years there. So back in July 2019, 8,400, so still down about 25% from there. 2018, July, we had 6,900, so still down from that, but getting closer to the amount of closed listings on the market, which has really been the driver of price adjustments and all the headlines out there is how many listings are actually closing. Now, days in MLS, it's still not much to write home about, folks. 7 days on the market is the average right now in the Denver MLS. That's nothing. Month supply of inventory. So this is starting to get up there a little bit at 1.7 months of inventory. And what that means is that if no new listings were to hit the market today, it would take approximately 1.7 months for the market to absorb all that inventory. A balanced market is 5 months. Now, let's zoom out a little bit to 5 years and see what that looks like. Okay, so 1.7 months according to 5 years is still almost as low as we've had in the last 5 years. And if we zoom that out to maximum, I mean, it still looks like we're at the very bottom of the trend here for the amount of inventory available. So once again, still a strong seller's market. But if you're a buyer, you have a few more opportunities and you don't have to make a decision within 5 minutes of a property going on the market. So percentage of closed to list price. This is always an interesting number. So if you list for 100,000 and it sells for 101,000, you get 101% of list price to close price, right? You sold for 1% more. And right now we went back to 100%. So if you list at 500,000, there's a very good chance you're going to get $500,000 for that property. All right. So then the amount of showings per listing has kind of balanced off a little bit down to 5.9 showings per active listing on the MLS right now. So not a ton, but what that's telling me is that the people who are out there looking at homes are the buyers. So you need to take advantage of every showing. You need to make sure that your property is cleaned up and it shows as good as possible because you want to take advantage of every person coming through that door. And there you have it, folks. There is your July wrap-up. So more of the same. What I will say for moving forward is these are the things we're going to be looking for. We're going to be watching interest rates. They just announced another 75 basis points hike last week. However, later in that day, Jerome Powell got on and also said that, hey, I think we're making headway on inflation. So the stock market has gone up about 10% in the last week and a half or so. Now, as far as what that did for mortgage rates is even though they announced a Fed hike, mortgage rates went down. So something important to know, the Fed's interest rate is not directly tied to mortgage interest rates. They move independently of each other. So I think if we do get over 10% mortgage interest rates, I think we'll see an effect of the market. But still to this day, there are no properties for sale. Historically, we're still at all-time low inventory levels. So that's our driving force in my opinion. Also, with interest rates, As interest rates go up, so let's take this scenario. You're looking at a $500,000 house today. Your interest rate might be, we'll just say on the high side, 6%. It'd be more like 5.25, 5, depending on how much you pay it down. But let's take 6 because it's easy numbers. Your payment each month is going to be a certain dollar amount with 6% interest on a $500,000 house. Now, if interest rates go up 1.5%, your mortgage payment will actually be more if you bought that house at $450,000. So $50,000 price reduction in a house with a 1.5% interest rate hike actually has you paying more on that monthly mortgage, which is fascinating. Play around with mortgage calculators. I'll include a link below. And once again, if you have any questions, reach out. I'm here. I'm happy to help you in any way that I can. And until the next time, happy housing.